Good day, subscribers. Welcome back to the Contrarian, everybody. Today I'll be talking about gold again. My last few videos have tended to be around precious metals and gold, but this is a pretty pivotal time in the gold space right now. Previous week, gold is about to break through a triple top level, or it's approaching that level. Right now, it's Sunday evening. It's been kind of slammed in the futures market, so this coming week will be kind of a pivotal week for gold and silver as well. A lot of the previous week price action was attributed to the Hamas Israel conflict, potentially US involvement with that or escalation of this conflict, and as well as concerns of interest rates, the Treasury market, everything involving the Fed pivoting. So gold rallied on a lot of these potential concerns or Fed policy changes in the last week. Today I'll be looking at an article about an expert who's actually predicting $10,000 gold in the next decade, or even less than the next decade, within the next 7 to 8 years. And this gentleman has been correct in previous bull cycles of the precious metals market. He's effectively saying that it's not just irrational and irresponsible central bank policy that's causing this. It's much deeper. The root cause of it is actually demographics and kind of almost a reverse of globalization, the reverse of that trend that allowed for so much productivity to be unleashed to the West. He's now saying that that's going to go in reverse, as well as demographics now hindering the West and most developed countries. So without further ado, I'll get into this article, kind of break down what he's saying, maybe give a little bit of my thoughts in terms of, for whatever that's worth. Article's title is Gold Price Forecast Expert Predicts $10,000 Gold and $300 Silver. And no, this is not David Hunter, a guest I've had on a couple times. He's also given those as likely targets in the next decade or so. So it does show that David Hunter kind of lines up with this gentleman, James Puplava. He is the president of Financial Sense Wealth Management. At the turn of the century, when gold was below $300, he correctly predicted the 10-year bull run in precious metals, expecting gold to reach new all-time highs above $1,000. In hindsight, he admits his call was conservative, as gold nearly achieved $2,000, and practically double his target. The lesson to investors is simple: when this man speaks, you'd be wise to listen. Now, maybe a word to the wise with that kind of a statement. Yes, there's a lot of people like that who've made predictions that have come true in the long run. I mean, Peter Schiff was also saying similar things to that. They've also been incorrect in the last decade. So, I mean, it's worth noting that no one has a perfect track record, although it is good to point out when people are correct as well. But in this article, the writer will discuss the demographic factors supporting much higher precious metal prices and why he believes gold may be on the verge of a major breakout. So the paradigm shift occurred in 2020. He's saying COVID was the trigger, but the real reason was demographics. The largest and most productive generation the world has ever seen retired. We must understand this because baby boomers will continue to drive the economy into 2040. One of the simplest ways to visualize the impact the largest generation had on the economy is through a long-term chart of the Fed funds rate, which tracks inflation, a byproduct of consumption and production. And then below he lists this chart. You'll see inflation rising from the 1950s to the early 1980s. The world consumed more than it produced as the baby boomer generation came of age. Around 1980, the boomers began entering the workforce, and we shifted to producing more than we consumed. He's saying this ended in 2020 when the average baby boomer retired. And yeah, it's no mystery that the baby boomers have had a huge impact on the economy, and most of them are retired, or I don't know. It's saying the average baby boomer retired in 2020, so it would hold to logic that a lot more than 50% of them are retired by now. And also the Chinese miracle happened in that time frame. So In the last 30 years, the world has experienced unprecedented productivity. China was the world's factory, and we achieved peak efficiency through global supply chains. Inflation was non existent. The disinflationary trends were so strong that during the 2010s, central banks lowered the price of money to or below zero. So that's getting at the zero interest rate policy or the negative interest rate policy in some central banks, that they were able to achieve that, which is kind of crazy that you could borrow money and be paid to borrow it or pay zero interest on it, even. That is insane. Um, Globalization was this trend. It was the achieving of peak efficiency. So you allocate tasks to countries where it's the most efficient to perform a specific task. China was the factory because there was a lot of cheap labor in China, other East Asian countries. But he's saying that that is about to go in reverse, kind of fall apart. So this economist is saying that he is predicting a global depression between 2030 and 2036 for several years. Nothing as severe as the 1930s, but a prolonged period of below trend growth. He's predicting it to start in 2030 because that's when we hit the next demographic milestone, when all baby boomers will be over 65 and most will receive full Social Security and Medicare benefits. So, obviously, at that point, the government's paying out much more than they even are already in retirement and all of these benefit programs. And basically, to finance that, this author is saying kind of the obvious. I would agree with it that massive monetary, expansion will have to be invoked to finance that. It's not going to come in the form of growth. Unfortunately, millennials, Gen Z, myself, we're just not producing enough to keep up. So what's next? The unprecedented rise in the stock market since 1980 was a byproduct of peak productivity, declining interest rates, and millions of baby boomers saving for retirement. That ended in 2020, and we are in a new paradigm of higher inflation, anemic real growth, expanding fiscal deficits, commodity shortages, and rising geopolitical tensions. And yes, he's saying that the appetite to address these problems is non existent, so governments will likely continue to print money to paper over their problems. Ultimately, he believes the dollar will be sacrificed. And that's where we get into a big, that is where gold happens. That is why gold could perform extremely well, as silver could as well. Essentially, when currencies undergo debasement like this, when trust is lost, especially if it's a fundamentally, trustworthy currency like the dollar, which is seen as the reserve currency right now, in terms of Western standards anyway. At that point, when trust is lost in the dollar, or at least a sense of trust is decreased from where it is now, people no longer trust the Fed, that the Fed's going to act responsibly. Let's say in the coming year, the Fed has to again go back to an easing policy just because, maybe they have to do this as a result of how high interest rates have gone. The fact that just to finance the debt, the national debt at this point, assuming rates stay where they are, would be about $2 trillion a year if that continues, if rates stay this high. So basic logic would say that pretty soon here the Fed's going to have to start looking at reality and say, okay, we cannot have rates this high with debt also this high and growth as moderate or low as it is. So at that point, you would have investors start to say, okay, the dollar might not be as, trustworthy as we thought it was. We're going to go with something else, probably something like gold, maybe other currencies, maybe other fiat currencies, or more developing currencies. But, other central banks aren't exactly that responsible either. So at that point, it does become a question of what investors go to. Definitely for US investors, um, there's the potential for gold to begin to gain momentum in dollar terms, which it hasn't really seen much of in a while. In other currencies, people are more familiar with gold, protecting their purchasing power. For example, the Turkish lira or Argentina peso. I mean, these currencies have had much higher levels of inflation. Consumers, citizens, investors in these countries have gone to gold as a safe haven. But investors in U.S. citizens could kind of experience this for the first time in a few decades, where gold is actually a safe haven, and as a result, you could actually see gold go way above what a justifiable valuation or price of gold in dollar terms could be. It's just how markets work. They way undershoot. They go through stagnant periods where sentiment is just dead and there's no interest in a particular market, and then you undergo a period of very high interest, much higher speculation, and it's that point when you kind of have to revisit, should I begin to sell some gold or gold stocks or whatever I'm in this market, since it's turning into such a speculative mania. I'm not saying this first kind of leg that I see coming in the next few months or year will get to that kind of extreme mania stage, but it could start to resemble that. And so at that point, it would be good to start thinking about taking some profits off the table, just because you're not going to make, this move from $2,000 to $10,000 in one bull market move. You're going to have periods of consolidation in there. And so just thinking for myself how I'll play this, once people, in my life who've never really talked about gold or silver before start talking about it, mentioning it to me, bragging about how much silver they just bought at, much higher prices than what it currently is. It's at that point when, speculation really enters in, and, people begin making way too bold of predictions that I would start getting out myself. Not forever, but just for a short period of time until that kind of reverses. It's just how markets work, and you really never want to follow the crowd. You want to, go as best as you can against the crowd, but still following what the fundamentals are saying. So, all this being said, I hope this was kind of a helpful article looking at demographics and almost reverse globalization, how these two trends could send gold and silver up much higher than where they are right now. Um, all this being said, I'd love to hear what your thoughts are about gold, silver, coming weeks and months and years, what that could look like. And I hope to see all of you again at some point.